If you've made serious gains in the cryptocurrency market or are heavily involved in it, you should listen up. Understanding your cryptocurrency tax obligations in Australia and appreciating strategies can help you save thousands, if not tens of thousands, if not even more. One thing we must note here is the ATO's crackdown on cryptocurrency tax. They have gone out of their way and have noted multiple times that they are following up cryptocurrency and ensuring that you meet your tax obligations. But don't worry, we are here to help. So one question that I get a lot from clients is, how will the ATO know about my crypto tax? Is Bitcoin, Monero, are these not private? How are these connected? One thing you must know is when you signed up for an exchange, you should have and you must have presented your information there via the KYC or Know Your Customer protocol. And this is one thing that gets overlooked a lot because you provided your exchange with your identification, with your addresses, with your date of birth, with your full name, with a lot more details about yourself. That's information that will be shared with the ATO. You need to be aware of that. Other ways in which the ATO will learn about your crypto tax obligations are via data matching and overseas data presentation. Another way the ATO will know about your crypto tax obligations is connecting to other countries via data matching programs. And so the ATO has connections with many other countries. And so when that information gets processed to those tax authorities, they will then be shared with Australia. So how are cryptocurrencies taxed in Australia? Look, there are multiple ways within the ways, but the two main ways in which cryptocurrency is taxed is one, as a business, and two, as an investor. And to get involved in the difference between business and investor, it ultimately comes down to your intentions and your actions. And these two are taxed significantly different ways. If you want to learn more on the difference and how you're treated, I'll link you a blog I wrote recently to provide a bit more information there. One cool aspect, if you're a non-resident for tax in Australia, or you're a temporary tax resident in Australia, then you may not pay any tax on any capital gains on your crypto because you don't pay tax in Australia on non-Australian sourced income or non-Australian sourced investment income. If you want to learn more about that, reach out and I'll explain that one for you. Cryptocurrency strategies and tips to consider. Number one is to be sure of your Australian tax residency. And this is for all my clients out there. And I always tell everyone how important understanding tax residency is because it dictates effectively, as I mentioned previously, what you pay tax on. Number two, confirm the tax treatment. As I also mentioned, we need to be aware whether or not your actions and intentions have dictated that your crypto tax is now treated as an investor or as a business. Private use assets, and this one is not spoken about enough. You will not trigger income tax, or you may not trigger income tax if you strictly use your cryptocurrency to purchase goods and services that are used for private or personal nature. You need to ensure that you're not using your crypto for business or for investment purposes in this instance. Number four, keep records, including balances at the end of the tax year and your transaction history. Personally, I've seen many exchanges unable to provide enough historical information for me to do my job. And that makes things really, really hard. And the ATO will not just accept that you are unable to now find any information. The onus is on you to keep your personal records. I recommend regularly, whether monthly, quarterly, or yearly, to save your information, save them as CSVs or Excel files, and keep them on your computer for your accountant. Number five, consider deductions or expenses that you may have spent that will lower your taxable income. Some expenses that may arise is transaction fees, and that's a big one because exchanges charge heaps. Whether you've done any self-education whether or not you're subscribed to any platforms like TradingView or any kind of Patreons or membership to other types of crypto experts. And number 6, talk to an expert. I cannot stress this enough about how important it is to talk to someone in the know. A lot of accountants, a lot of tax agents know barely anything about cryptocurrency and barely anything about how best to treat it to ensure that you are protecting your assets and are minimizing your tax. If you want to learn more, do not hesitate to reach out. I'll leave our contact details below. And if you want to learn more about tax residency and the importance of tax residency, watch this video here. Thank you so much.